Hello, ladies and gentlemen. Thank you and welcome once again to Leader Freak Public Economics Hub. Leader Freak Public Economics Hub exists to ensure that every Kenyan has a solid and sound understanding of the economy, of economic policy, of the state of our country as far as economic matters go. It's important that we have that understanding so that we are better placed to demand better from our leaders, to enforce accountability, and not to fall for good sounding words that are made in the form of promises by politicians when they seek election and re-election, when in actual sense, those words are unrealistic. Those promises are unrealistic. But there's only one way of knowing by understanding how the economy operates and where our economy is. And that is why we have Leader Freak. Today, we will be looking at the state of Kenya's economy with regards to exports and looking at how the Kenyan export space has transformed over the past 28 years. And I'll start by sharing this quote that I wrote, and it says that should Uganda shut its doors and windows, Kenya's exports will fall by close to 40%. So 40 is not too far from 50%. That means that nearly half of our exports are consumed by Ugandans. So we are heavily reliant on Ugandans to grow our exports, to expand our exports. And you can see here that exports have grown significantly. From 1998 to 2025, our exports have increased from 121.3 billion Kenyan shillings to 1.62 trillion. That is significant growth. And we can see that of that increase, Uganda has captured an additional 23% of it. And so most of our exports are being absorbed by Uganda. And so a lot of our growth as a leading exporter, we are not yet a leading exporter, but a lot of our growth in the export space is thanks to Uganda absorbing most of those exports. Let's look at the numbers in terms of growth. And I call it growth without safety for reasons that I will explain soon. But we can see that the growth of our export has been 13.4 times since 1998 to 2024. That gives us an annual growth rate, compounded annual growth rate of 10.5%. That is enormous. If our economy had grown at a similar pace, we will be very far now. Okay. And as mentioned earlier, Uganda has taken up 23% of that increase. In 1998, Uganda only accounted for 16% of our export market. As of 2024, that was 39.5%, very close to 40%. And so Uganda can be classified in four eras. The first of those is 1998 to 2015. The exports were stable and it was about 10 to 25% of the export market was Uganda. Between 2015 and 2024, there is an explosion. The exports grow from 25% to 39.5% in just 9 years. That is very quick, rapid growth. Okay. But we see a trend, a change, at least in 2025. It's too soon to make any significant conclusions, but there was a significant decline in 2025, which may suggest that Uganda might have peaked at 39.5%, but that remains to be seen. And that tells us that nearly 70% of all the growth of export of Uganda as an export market for Kenya happened in the last 9 years. So that concentration was very rapid. It was not something that happened over a long period of time. As you may know, 9 years for a country, for relationships is such a short time. But there has also been change in other spaces. You cannot gain on all fronts. Every time you gain somewhere, you lose elsewhere. And in the case of the export market, our largest loss has been the United Kingdom. We used to export 13% of our exports to the United Kingdom. That is down to 3.8%, a loss of 9.6 percentage points. Tanzania, our neighbor, that has dropped from 13.3 to 4.1%. That is huge. It will be interesting to investigate why our exports to Tanzania have fallen so significantly. It could be because of integration of COMESA. Tanzania can get goods. It's also developing, and because it's developing, it's becoming more self-reliant. It also has access to infrastructure and the port. And so perhaps the advantages that we had in the initial days have weared off over time. But that is worth investigating. I don't want to draw conclusions from hypotheses. And we see Uganda, of course. So we can see Africa is taking a large share. Europe declined significantly. And I think United Kingdom and France taken together are about 17% as of that time. And that number has come down quite significantly. But we can see Uganda and Africa at large taking more space. And our exports to Europe fell from 25% of our exports to 11%, while East Africa rose from 20% to 50%. So this could speak to the regional integration that we are having in the East African community. And there is greater mobility of goods and people, and that promotes business, that promotes our exports, and that's what we see here. But as mentioned earlier, Uganda has started declining, and that is as of the data that we have between January to August 2025. It had peaked in 2024 at that 9.5% of our export, and in 2025, that value came down to 37.3%. This may speak to the fact that perhaps our exports to Uganda peaked. They reached their highest point, and beyond that, they have now to start coming down. But remember, Uganda has been a growing country. And for as long as it has continued to grow, it has been absorbing our exports. But that cannot continue forever because our exports are growing faster than their imports. That leads to saturation. And when that saturation occurs, it is like when you're eating food, and then you get so full that you can eat no more. That is what may have happened with Uganda. There's also increasing competition. Every time a person who sells something produces it, that person, unless they are a monopoly, they are competing for the market with other businesses. The same is for countries. China, India, Pakistan, name it, all countries that can have access to any market will do their best to have that access. So Kenya is competing with Uganda, with other countries for Uganda's market. But you should also know that Uganda is developing its own infrastructure. It's developing its own industries. It's developing its own resources. So it is also natural to expect that over time, as Uganda catches up, as Uganda, at least in specific sectors, I'm not suggesting that Uganda and Kenya are miles apart. I'm suggesting that there are areas that Kenya has specialized in. And as Uganda starts to do more of that work, then the reliance on Kenya becomes smaller and smaller. And we can also see perhaps the readjustment and the reassessments in the East African bloc. We had the infamous case of Uganda wanting to get their pipeline through Tanzania as opposed to Kenya. It's easier to do it through Kenya. It should be cheaper, I would imagine. But there are always several reasons why a country will have it will change its preferences and considerations. And so when such things happen, then Kenya loses its advantage and its access to such a significant market for Kenya. But even though this growth has been great, that we can export more, it has not been the best kind of growth because it creates a heavy concentration. The HHI index, which is the Hafidol-Hashman index, measures market concentration. And ideally, you want this index to be as low as possible because that means there is competition. But when one player takes a huge chunk of the market, that means that there isn't much diversification in the economy. And when we have such a case, then we run into problems. And in 1998, we were at an acceptable place. Usually you want the Hafidol-Hashman index to be less than 1,500. Between 1,500 and 2,500, that is acceptable. That is okay. We can handle it. But when the HHI is greater than 2,500, then we are in a danger zone. And Kenya has been in that danger zone since 2012. And 2024 was the highest because we were at 2,803. We must understand also that, of course, this comes with major risks. These risks, the first of those is policy hostage. And when you talk about policy hostage, is we are really at the mercy of Uganda. Should Uganda decide to raise tariffs on Kenyan exports, then Kenya will feel it quite significantly because a huge chunk of our exports, and that is a big part of the economy. So a very huge part of the economy is extremely vulnerable to the policies in Uganda. So should the Ugandan government decide to raise tariffs or decide to do business with other countries at the expense of Kenya, then that is when we will be exposed. Okay. And we don't want to be in that position. If Uganda becomes unstable, then Kenya suffers. If anything happens to Uganda, then we are hit significantly. It gives us a very huge shock. But there's also the power imbalance. Our dependence on Uganda is such that Uganda has significant leverage on us because they have an economic lever and they can decide that they're not going to import, say, 40%. And there is very little we can do. They are dependent on us, yes, but they do not export to us as much as we export to them. And they have alternatives. And so there is an imbalance. Even when we negotiate, we might not be well placed to negotiate from a position of strength. And that is important to know. And then we are also extremely vulnerable to shocks. And we become vulnerable to shocks because when you think about something like COVID-19, if we just lost a little bit, something like 5%, then that is a decline of 81 billion worth of exports. And in COVID, we saw that shock. Exports grew by only 0.16%. And that was the slowest it has been in ages. And that is understandable because most countries faced the COVID shock and they had disruption in supply chains, and exports generally for most countries dropped. But we dropped quite significantly and it could have been worse. It helped that Uganda was close to our borders. The exports rebounded really quickly. And Uganda actually helped us survive that shock because they continued buying our products. And so we have been in that period of readjustment from the COVID shock. And the COVID shock, its impact and its effects continues to linger. And I know people talk about COVID a lot in nearly every space, but this might be one of those areas where there has been an imbalance, and the countries around the world are moving about trying to refine their footing or equilibrium, if you may. And so we have several choices that we can consider. We can do nothing and hope that our reliance on Uganda will fall to 33% by 2028. That means for the next few years, we really have nothing much we can do to Uganda. We just have to survive at their mercy. And that way, we will be negotiating anytime we negotiate from a point of weakness because they hold absolute leverage of us. Perhaps not absolute, but a lot of leverage over Kenya. Scenario B is we need to start diversifying. Okay, we need to look at other markets. We need to look at Ethiopia. We need to look at Rwanda. We need to look at the COMESA countries. We need to increase our trade with Tanzania because it does not add up that our trade and Tanzania as an export market has declined so markedly. So that is something we can explore and see. And when we have alternatives, when we have options, then we can negotiate from a point of strength. It is always good to have options. When you rely on one partner, Should something happen to that partner, you're out of the list. I'm not suggesting anything. I'm just saying that Kenya is extremely reliant on the Ugandan market. And should that continue, then we will forever be exposed to anything that happens to Uganda. And the final scenario is a mixed implementation. We see to it that Uganda's export market falls to 34 to 36% of Kenya's export, and then it stays there. And then we also try to expand to other markets, but not significantly. And so this is sort of limited action, but we will be somewhere in the middle. We are not the strongest we can be, but we are not the weakest we can be either. So those are some of the things that Kenya should consider as it goes forward. But 2025 was the year of change, we can see, as far as our reliance on Uganda goes. And we have an option now to either act from strength or act from weakness. And what we see is that Uganda reached its peak. There is no expectation that it will go beyond that. It is unlikely that Uganda will continue to play it will continue to play an important role, but it will not be to the same extent that nearly 40% of our exports have to go to Uganda. Otherwise, we lose that market. So that is it about the Kenyan export space. We continue to do this work, and I'll continue to do it. Our next video will be talking about the role of the central bank in Kenya. Please subscribe, stay tuned so that we bring that your way. You will have a chance to listen in and see where our country is and how it's doing. That's it for now. Until next time, take care. Bye bye.